What's up, guys? We hit max loss today. We're down 198, and that's fine. It's fine because I actually stopped. My problem, always my problem, is having red days that are like $800 or something. So I need to stop when I should. Clearly today's market is like really crap, and not a lot of things are moving in the way that we want them to move. So I stopped. We can go over some of these. Where is it? Here. I think it'll be this one. We can go over some of the live trades. We'll see what happened here. My first one was on RKDA. So I marked out a clear pre-market level here on RKDA. So this is where I was looking to buy. Now I knew that this stock was a short. Now watch this. Hold on. SEC filings. So I looked in the SEC filings for RKDA. An effect. So this means that they are putting in effect, as of 14 days ago, the S1 form that they put out before. So this is the S1 that they put out in December. Oh, that's not the right one. This one, the S1. If you just search for offering, oh my god, offering, we go down to see how many shares. So they're offering almost 1.5 million shares of stock, pretty much, is what this is saying. 1.5 million shares of stock. They're raising money by putting out common shares on the market. So that means that there could be potentially 1.5 million shares of selling pressure just to raise money on this stock. Now the stock is up today. They put that in effect, when was that? The 14th? 14th. So, I don't know. Look at the volume on these days. I don't think that they were selling on these days. So, they've been waiting for a pop for them to sell. So, definitely they were selling today. I don't know how much they would have sold. The volume on this is pretty high. But that's what made this a short. Now, this would have been a great short right up in this range. Now, I think that that's the trade that I should have actually taken. So, the trade that had already happened was from 790 or so up to 830. Now I missed that, and I thought maybe we could get a higher move. I think I bought 1,000 shares. Yeah, 1,000 shares here at 788. So I don't know. This could have been my mistake here. I should have maybe used less shares, knowing that this was a short. But at the same time, I got such a good entry that my risk was very, very small in this trade. So it came back down here. You know, we hadn't bounced yet. We were just selling, and I think a lot of people knew this, so they were hesitant to buy this stock. So I stopped out almost immediately, and then the selling just started. Now, if I had held on here and I did not have my hard stop, I would have been down $200, $2 something. You know, I would have had to stop right there, and I would have been pissed off. I would have been frustrated. Blah blah blah. So. Glad that that didn't happen. So that was that trade. And then I took a Z-SAN trade. I was looking for the break of 550 here. Now I knew that this one I was chasing, so I used less size. And then I'm already up a couple cents. And I put my stop right away at around break even. Sorry, excuse me. 545 is my stop. Now, this was another mistake. You know, I added here. I should have added right there at my entry. But instead, I waited and I added for this breakout. I was adding for this breakout of 555 to sell at 560, so I bought right there for that breakout at 558. I got filled. But then this guy at 560 didn't break. Took a little more consolidation, and then he finally broke. And I'm seeing how high I could get, because I had that level marked out at 570 something, 573. So I got 500 shares out there at 564. And I got stopped out on the way down for the rest. And it was an okay trade, not really though. Like, I had 1,000 shares total, and I only made $40, so that was only a really 4-cent capture, which isn't that good. So, with that, and with RKDA, I should have stopped. I should have just been like, okay, today's clearly a little I should reduce risk, or I should just stop trading. But I didn't. I took TKOO, or TTOO, at the support line right here of the pre-market highs. Now, again, I was just waiting for this to bounce and come back to high of day, but it immediately sold off, and I had a really tight stop. So again, I lost $30 on that. So at this point, I'm down, what, 40, 30, 20, like 10, no. How much am I down at this point? 50 on RKDA. So I'm down 10, so I'm down like 40. $40. And then I look at HZNP and I say, wow, this looks good for a breakout. It's consolidating at this level here. It should break out and move towards $28. Now, this is what I get for chasing. So I bought in for the breakout. It looked like it was going to work. I got filled on a dip here, a very tiny dip. And then I get flashed out of my stop, and then it surges up, so I rebuy. So this is a frustration trade right here. This is what I recommend you do not ever do, because this is not a good trade. Look at my entry. What am I doing? Like you could say I'm buying a breakout, so it's not a completely invalid trade, but I got stopped out of a trade and then just immediately took it again. This was clearly out of frustration. I need to either move my stop lower so that I can not get bumped out of the trade, or take less size. I shouldn't be doing this. So what happens here? So I get flashed out. I get flashed out of the stop, and all of a sudden I'm down 156 on this stock. I'm down 198 on the day off of this stupid ass trade right here. And I have to call it. That's it. That's all there's to it. HZNP, that was the last trade there. I don't even care if something else is and look, of course, HZNP worked out. So I failed to identify these levels. I failed to identify that, you know, there's a pivot point right here, clearly. I was buying into a resistance level and selling into a support level. I was literally buying high, selling low. That's exactly what you're not supposed to do. So if I had seen this would have looked pretty bullish, with an entry maybe here or an entry maybe here. That would have been a proper trade, and it would have worked out, and it would have been fine. So something to learn. Don't chase. Don't take frustration trades. And just always be improving, and just try not to make the same mistake again. Like, I don't want to have to make another video saying I made the same mistake again. So, you know, I'm down less than half of my profits of yesterday. That is what defines a profitable trader. Now, to be consistently profitable, these are the types of decisions I have to make every day. I either have to stop when I'm down only $40, or wait for the appropriate entry on this stock rather than chasing it trying to get green. So this trade would have worked out. And it was just simply because I didn't wait, or I didn't position myself correctly. Like, these are my entry. This is not where you're supposed to enter a stock. Like, I don't care what ended up happening if this had just tanked right here. You really shouldn't be entering right here. Like that's just not what you should do. So hopefully you guys got something useful out of that. I'm gonna go eat my sorrows away, I guess. Go have some good food. Go work out. Just detach from this. You know, you're not defined by your trades. Your last trade, a lot of traders struggle with that. You're defined by the decisions you make revolving around risk. So the reason that I'm profitable is because I make decisions like this. I know when to stop. I don't care if there's something good. I'm just gonna walk away and we'll come back tomorrow. So we'll see you tomorrow.